which is something which we focus very much. The whole business model focuses on a disciplined execution of strategy, a clinical focus on basics of banking, so sticking to basics, supporting and understanding fully customer needs and tailor-making solutions to customers rather than pushing homemade products, and most importantly, doing this within a framework of a very strong governance, compliance, and risk management framework. For the second quarter, we would like to focus on 3 deliverables for the business. We commenced towards the end of the fourth quarter last year in upgrading our ATM switch, which is a jump of 4 versions from where we were last year. And we are just rolling out the new client interface to give a complete new touch and feel experience to consumers, which is hopefully will be rolled out across our framework by 30th of June, which will give a complete upgraded consumer experience in that particular touch point. The second initiative is the commitment to join the Lanka Clear Common ATM switch again by the end of second quarter. We are currently very much on course to achieve that. Once that is achieved, the bank will have the access to a network in excess of 2,000 ATMs, which will greatly enhance the delivery, especially the retail delivery capability of the bank. And the third distinct initiative is to finalize and roll out the Islamic banking window, which we initiated about 18 months ago. And we hope that once the single window comes out at the end of second quarter, we will offer an interesting alternate method of financing solutions to mainly the corporate and upper end of SME client base. So this is something to look forward to. And that is what we have open in terms of initiative. In terms of merger discussions, I think our plan as shared with the central bank is currently on course. We have 2 pillars to this journey. On one hand, the regulatory pillar, which needs 2 things: the amendment to the DFCC Act, and secondly, the achievement of, at minimum, tax neutrality for the merger story. And in both these cases, the draft proposals have been forwarded to the Secretary to the Treasury, and we are optimistic that these 2 initiatives will receive the necessary regulatory blessings hopefully in the next 60 days. On the other side, as far as the businesses are concerned, the valuation advisors, the legal advisors have been appointed by the 2 respective banks, and we are in the process of finalizing the appointment of a common transaction advisor who will take the 2 banks from where we are today, initially up to a pre-merger journey, and also give us the option of continuing that conversation in embedding post-merger business plan. So I think the teams from both banks are continuing an active interaction, and we are quite pleased with the progress made so far. That is all from my side, and we are open now for a chat to entertain any questions from you. Thank you very much for listening to us. You can also, for those who wish to, could use chat as part of the webinar to give your questions in case you do not wish to come on audio. There is a question about the outlook for net interest margins and its ability to the ability of NDB to sustain above the industry average. We believe that the ability to sustain it above the industry is a realistic proposition, given that NDB experienced the least shock in the last couple of quarters vis-a-vis industry. I think we have seen some of the bigger banks experiencing a much sharper shock and decline than our ability, probably also because of the quality of funding, the diversification of sources, and maybe realistic pricing. So we believe that the 3.5% which we currently enjoy could be reasonably defended during the next 2 to 3 quarters. What we are also hoping to do is, once we take on the questions, the finance team will host this on cloud as well as YouTube, and the details will be sent out to all registrants. Okay, there are a couple of other questions. Let me take them. There is a question regarding the impact of pawning loans driving the asset quality down in the last 2 quarters. From NDB's perspective, our exposure to the pawning business, we were latecomers. Our impact or quantum of pawning loans is probably around 30 basis points as part of the total loan book. So I think it's the shock is far less than the industry. Yes, we have had a few losses, but what we have been doing is progressively cleaning the book. Medium-term strategy is pawning is not a part of our strategic composition of our loan book. We would continue to have a portfolio perhaps up to about 1% of the book strategically deployed, not across the 80 branches, but maybe in about 20 to 25 branches where we believe that the product is needed mainly as an alternative source of bridging finance for the agri sector. And when we do that, we would also strengthen the operating matrix in those respective branches to give us upside protection. As far as the perceived impact of the CBSL proposed guarantee, I'm not fully aware of the exact details. I believe that the monthly meeting with the chief executives of banks, which is scheduled later this week, may shed more light onto the specific details. And once we know a bit more, we will try to send out our response to you as participants. So at this point in time, I don't have specific answer to that. I guess it's going to give some comfort, but we need to know a bit more in terms of the exact relief to comment further. There is another comment regarding the demand or absence of credit demand for the year so far, and our estimation of the full credit growth for the sector. I believe that the sector has shown overall a negative growth so far. All I can say is for NDB, we still believe that we will go after our planned aspiration for the full year. We still believe that there are pockets of opportunities which we have been and will continue to pursue. From an industry perspective, this is my personal take, not perhaps the take of the bank. You may see an increase, but perhaps not the double digit, the high teens, or you may not see the 20% type industry growth, because a great drag has been the reduction and better management of loans by the two state banks. So I think that has brought down the industry, and I think there are some impact in some banks regarding the pawning portfolios, and also there has been some impact in terms of agriculture. So I think we may not see the industry benefiting from a full robust growth, but within that limitation, I think NDB is very clearly focused on getting more than its share. Any other questions, ladies and gentlemen? We perhaps have time. Oh yes. There's a question to see whether the bank has seen stress in any other area other than pawning that would cause concern for asset quality. Perhaps some aspect on the watch listing side, we're looking at some of the personal loans in certain townships where there has been concentration of maybe some agri-related situations where we are looking at the communities as a whole to see whether there is a need to be watchful. But other than that, the pawning has been the main watch listing area so far. Of course, what we have done is, given that we are currently on track for a 23 to 25% growth, we have considerably strengthened the different layers of risk management, and also not just on watch listing, but even go on a level beyond that to pre-watch listing to strengthen the monitoring process at all levels. So you try to balance the credit growth on one side with the watch listing on the other side, which I think is probably the greatest challenge for an environment like ours today. Somebody's talking. Sorry, I think somebody was trying to speak. Let's get the okay. There's a question regarding the composition of NDB's loan portfolio, in which industry sectors we see the highest growth. In terms of loan growth, I think we see overall corporate and project financing certainly playing a major role in the overall composition. And within that, if we look at the book, infrastructure continues to play a major role. Renewable energy continues to demand for quality credit. Leisure to some extent is also on the demand. The BPO, KPO sector is slowly starting to see some increase. On the retail side, we are seeing two clear opportunities. One is in the rising housing finance demand as income levels go up. We're seeing aspirational demands for better quality housing and home improvements, which we are actively promoting. Secondly, also for energy efficiency in homes. So energy efficiency loans are in there, and also education, given that Sri Lankans generally tend to focus on education as a key attribute. We are seeing increasingly good quality, affordable degrees being rolled out in Sri Lanka parallel to the state education system, which itself is giving us opportunities for educational loans, which is something we are promoting. That is on the retail side. As far as the SME sector is concerned, agri, dairy is still continuing to do well. What we try to do is, wherever possible, to match the requirements of the SME by supply chain linkage. So wherever possible, to link the SME's supply output with the demands from corporates. So you try to also create access to markets and make the lending proposition more robust. In terms of the NDB strategy, which has contributed to a higher loan growth vis-a-vis the local banking sector, I guess the only thing I would say is the right attitude and the relentless focus in a competing tough market. One cannot afford to two things. I think one is the absolute focus on ground level reality and market information, and secondly, the right attitude to find solutions rather than push homemade structured products. So I think those two have made, we believe that they have given the key differentiator to our team vis-a-vis industry. There is another question regarding the proposed merger with DFCC, whether it would affect the strategy of NDB in focusing on commercial banking. I would normally address this with my counterpart together, but I think it doesn't harm in making an observation that the combined bank has a unique opportunity of creating a dominance in commercial banking while also retaining a distinct pillar in development banking, because both these banks have a tremendous brand equity and intellectual capital which has been developed over decades in the area of development and project banking. So that I think would be defended and developed as a very important pillar, but the overall focus would be to also make this as one of the systemically important large commercial banks, which also has a committed one-stop shop to development banking. And I hope that answers the focus. Folks, so so we have one other question. So do we expect any additional foreign currency bond issuances in the coming 12 to 18 months? Just to correct the facts, NDB has not issued any foreign currency bond to date. what we have done is to intelligently raise some foreign currency long-term debt in the form of syndicate loans from two groups of fund providers. Yes, there is. We are in the final stages of raising the second tranche of what we originally envisaged towards the last quarter of last year. As you know, we successfully concluded the first tranche of 125 million, which was led by IFC with a group of syndicate banks. We hope to raise about another 100 to 125 million in the next 3 months from the same syndicate as well as another long-term provider of funds. So these are not bonds, these are long-term loans, which makes business sense to NDB. And they would not be subordinated, they would be usual, not straightforward loan. Senior loans. So I guess we've come to the end of the morning session, ladies and gentlemen. Thank you very much for switching in and asking some pertinent questions. And we hope that what we have shared with you makes sense on a story which has been with the objective of demonstrating sustainability, steadiness, focus in the journey. And we hope you would continue the engagement with yourself and have your support in delivering all-rounded performance for the next 3 quarters. Have a great day. Thank you.